Hello everyone, George DeSantis here with the Look at the Market for the week ending Friday, October 25th, 2019. As you all know, I haven't done a video for about a month since I had that awful fall. I'm recovering nicely. Have a bit of a scar on my forehead now, but apart from that, and some pain in the neck and in my right knee, I'm doing pretty good. I'm almost back to normal again. So we'll take a look at the market. For those who are new, basically the format is simply that I take a look at the general market using the S&P as an example, the general market, and then we take a look at some individual stocks, look at some seasonality, etc. So let's begin by bringing up some charts well, before we get to the charts, let's look at the disclaimer as usual. So the disclaimer simply states that this video is for educational purposes mostly. I am not an investment advisor, and if you need that kind of advice, you should turn to one who is a certified investment advisor. So let's begin by taking a look at a weekly chart of the S&P 500 as we usually do. Well, here's a weekly chart of the S&P 500, and let's of course go to the right side of this chart, and we can see the moving averages are one above the other. The yellow line, is exponential moving average, is above the 9 exponential moving average, and that is above the 30 weighted moving average. So insofar as these moving averages are concerned, we have an uptrend. This is on the weekly chart. If we crunch the chart up a little bit, we can see a little more clearly some other things. We can notice that the parabolic, using these parameters that I've changed to, that I've used recently, parabolic is now saying trend is switched to an uptrend. The parabolic white dot is below the most recent bar, and it's below the previous bar as well. We still have room at the top because the Bollinger Bands, we're not quite there yet at this 2 standard deviation line, or of course the 3 line, the 3 standard deviation line. So we still have room at the top. What else can we say about the chart, the bullish scenario here? We'll talk about possible negative things in a minute. But insofar as bullishness is concerned, look below the chart, below the price chart here, and we'll see that MACD has been in bearish territory. And although we had this bearish divergence, previously we had this bearish divergence, because as the market made a higher high here than this high, MACD made a lower high than this high. And we did have a breaking of the back of the bulls here. So we did have that divergence and we played it out. It seemed to have been played out. If anything, one can make an argument that we are setting up here for bullish divergence. Especially, not quite, but these are all relative in some ways, We would have had more confidence in calling this a bullish divergence if this bar was green, if this histogram was green, meaning that we had made some positive move above the 0 line. We don't have that, but it's not far removed from it. So I'm going to lean on the side of a bullish divergence here. Okay? Especially since this low is about the same as this low. So it's a little questionable, but I'm going to say I'm more bullish than bearish here. Look at Williams percentile. Since it broke above the magenta line, the minus 50 line over here, it stayed above it, tested it once here, tested it here, tested it here, and is trending up above the 60% line, minus 60. I think that would be minus 40. Williams, RSI 12, which is very, very prescient on the weekly chart, broke above the 40% line right here, that yellow line, right? And since then it's remained above it. And according to the research with using the 12 RSI, in a bearish market, you don't see this above the 40% line. So I think if we look at if we weigh the factors, we'll find that yes, it looks as though we're bumping up against that resistance again of 3,000 or thereabouts, 3,022 right now. But I'm thinking this market is really setting up to go higher, purely on the basis of these other indicators here: parabolic, MACD histogram, looking like it's more of a bullish divergence here now. And these are the two, Williams percentile and RSI 12. Let's look at the daily chart. So on this daily chart of the S&P 500, as usual, we want to look at the moving averages. So the 4 is above the 9, 9 is above the 30 weighted moving average, and the parabolic dots have remained below the most recent bars. Now, on the right side of the screen here, we have a bullish engulfing candle. The body of this candle totally engulfs the bottle of this, the body of this candle, which is more like a doji, small body candle. And so that's bullish. So you have parabolic looking bullish since it became bullish here. And you have a bullish engulfing candle. We have room at the top. We are not at that 2 standard deviation line yet. And when we go down to MACD, we could see that MACD is in bullish territory. As far as Williams is concerned, Williams percentile, we crossed above it here, and we've remained above the magenta line since then. And with RSI 12, although it's not as predictive as on the weekly chart, it's not as predictive on the daily as on the weekly chart, it still shows us some indication of a upside movement here. So all in all, I think this market really wants to go higher, and we'll see how that turns out for the coming week. Let's look at some other charts. Here's a chart of the S&P 500 from Best Choice, and with Best Choice we can see the regression channel here, and when it's at the 90% line up here, it's overbought. When it's here, it's oversold. And so what we have now is that the S&P is now at about the extreme of 73. So as I said earlier, there's room at the top. This can rally quite a bit from here. So that's insofar as the S&P is concerned on the extreme lines, the regression lines. So let's look at seasonality now on the general market, the S&P 500. And here's a chart of it, of the S&P 500. And what I've done is I've set it up so that we can see what the best trade is using a 14-day minimum, a minimum of 14 days per trade. Okay, so when I scan it this way, this is the trade that comes up here, and the dates are November 20th to December 5th, and it's 100% win percentage. Average profit is 2.67%, and this is over a 13-year period from 2005 to 2018. And you get a gain of anywhere from, well, 1 year you had a flat year, so zero gain, 2 years actually, but it ranged anywhere from 1, all the way up to 16% in 2018. The average is 2.67. So if you're interested in the seasonality, we are entering that seasonality period now. More reason to be bullish. So since we are on the theme of the general market, and I was just thinking, because we're going to run out of time on this video, I'll do 2 videos today. And the second video, I'll deal with individual stocks. But going back to this S&P chart, this is a chart of the SPY, which is, of course, as you know, 1/10 the value of the regular S&P 500. So it will be a 300, whereas the S&P 500 is a 3,000 plus. So what are we seeing here? We're seeing here that it's bullish. The ETF is bullish. There are about 400 stocks that are either bullish, very bullish, or neutral, to 90 that are bearish. I'm just going to point out a few things to you here. And as far as the other indicators are concerned, you can see it's very bullish here. You can see that it's outperforming the personality, as the Shaken folks put it. Personality of the spider changed here when it started to outperform the Russell 3000, and since then it's been outperforming the Russell 3000. So the other thing to look at is that the overbought oversold indicator is now overbought. So we're not going to get a steady climb from here, even though I'm bullish and I own stocks, you know. We'll get some volatility, pullback, etc. Backing and filling, some people call it. But generally, it looks as though this thing is going higher. Here's a chart from stockcharts.com that we've looked at many times in the past. You may recall that back here, Alex Elder sent me an email pointing out that we fell below that minus 400 number of stocks making new highs versus new lows. We were on the minus side of this, so there were more stocks making new lows than new highs. And what Alex pointed out from his research is that once we break above that minus 400, we're going to have a nice rally, which we did, and we did here too, and we recently did it again. And I remember a couple of weeks ago when I did the last video, or maybe some couple of them before that, I pointed that out. I said, look, once we get past this minus 400, watch out, we're going to go higher. So we're making new highs again, many more new highs again. Here's another chart of the S&P. It's a daily chart showing the impulse indicator. And for those who are new, when the bar is green, we are allowed to buy the stock or the index or whatever instrument we're looking at. When it's blue, we could go either long or short. We could buy or hold or whatever. And when it's red, we're not allowed to buy. So right now, it's a green line, a green bar, so we're allowed to buy the market. We're not allowed to go short, in other words. And here's another chart we've looked at before, and that is a chart of the S&P 100. It shows the percentage of stocks of the S&P 100 that are above the 200-day moving average. And once it's if it's between 50 and 65%, we can trade the market. It's tradable, according to the research. When it is above, it's bullish. When it's above 65%, it's bullish. So this brings us to the end of this video. I'm going to do another one with the individual stocks, and something a few of us looked at on Friday, ETFs on the spiders. So we'll close this video here for now, and we'll begin another one showing the individual stocks, etc.